I'm going to go over 5 key points that are important to know if you're trying to improve your credit score for a mortgage. Number 1, and by far the biggest, mortgage lenders use specific scoring models that you generally can't access as a consumer. They're not the same as Credit Karma scores. They're not the same as the FICO models that you get from your credit card in almost all cases. So that's the biggest thing, number 1. Number 2, lenders can soft pull credit. What a soft pull is that it doesn't count as an inquiry. And a mortgage lender can soft pull a mortgage model score that gives you what the exact score currently is. So there's no impact to your credit score. Generally speaking, it doesn't cost you any money. Some lenders might charge you. I know I don't. Okay. Number 3, there are specific targets to reach depending on the loan type. It isn't just, if my score is better, I'll get price improvement, I'll get qualification improvement. It depends where you are and what point you need to reach based on your specific situation. Okay. Number 4, actions that improve credit score are not intuitive generally. It's not there's certain things that you do that can improve your score that there's no way you would think that by taking that action your score will improve. And number 5, the biggest one, the reason why I have this video up with this what if simulator is you don't need to know the details of it, any of the first 4. All I need to show you now is that with a soft pull, as a mortgage lender, I can access a mortgage model simulator that's specific to mortgage scores that will tell me exactly what happens to your credit score when you take certain actions. So it is not important that you know the variables. All you need to know is that this tool allows us to predict or give you a set of actions to know what your score will be if you do certain things. So I'm going to give an example now. I pulled my own credit. Just to give you an example of how this works. And my current score is 806. And I'm going to give you a couple examples of there's no way you would know that this would improve or not improve your score. As an example, on these credit cards on here, I have a 1% balance on one card. Now, a lot of people, before they come to us lenders, they'll take certain actions that they read online that should improve their score, and they'll pay off all their cards to 0. They'll say, be so happy they came to us, they said, we paid everything off to 0, and anyway, you can see when I pay this off to 0, my score drops 7 points. Now that doesn't make any sense, but that's just an example of you need the simulator to be able to tell you. You can't just, if you have the ability to have a specific plan, why wouldn't you get it? I'll give you another one. Online, you read all over that you need to keep your balances under 30%. That's true. It's good to have them under 30%, but that's not ideal. And depending on the situation, that's like I was saying in number 4, we can, let's say you meet with me, soft pull your credit, we can have a specific target based on your current profile, depending on if you have an FHA loan, conventional loan. We can see where you are, what you can attain in credit score, and have a plan for that. But so, like if I was to put a balance on some of these cards, so you can see I have a total of roughly 31, under 30% if you were to average all the cards on this account, and my score dropped over 30 points. The point is, people have a limited amount of money. They need to know how to use it the most effectively to improve score. This tool allows us to do that. It allows us to tell you, should you pay a collection? What happens if you delete a collection? It goes into incredible detail what I can predict with this tool. Anyway, so the summary of it is a lender can soft pull credit. We have a simulator tool to say exactly what your score is. It doesn't cost you any money. It doesn't count as an inquiry. So it is crazy somebody uses a different method to try to prove their score. It doesn't matter to me if you're buying a house in a year or in 2 years. The point is we can create a step-by-step plan to show you exactly what to do with your credit.